Today, we're going to talk about not only how do you buy a company, how do you buy a whole industry, and how do you do it with little or none of your own cash? Today, I'm going to make you a believer because I'm going to show you what we're doing in one industry right now. All right. Is everybody ready? This is an area where we're doing this today. And what I'm going to take you through is the actual presentation with a couple of little modifications for privacy reasons. We've removed any names from this of the companies we're actually bringing into a strategic aggregation, as you're going to see here. But I'm going to take you through a presentation that we're currently making to jet charter companies. They're the folks who arrange all of the jet transfer other than the people who actually own their own jets. So this is a growing industry. It's a profitable industry, but it's also a fragmented industry. And what that means is there's lots of small to mid-sized players in this field. And so there's only a couple of bigger jet charter companies that dominate the industry, like NetJet, and there's one or two others. By and large, there are dozens and dozens of these intermediate sized jet charter companies. We're currently acquiring two of them. One of them does $111 million a year, and the other one does approximately $123 million a year. And both of them are being acquired. They both serve slightly different arenas of the jet charter industry, but their primary function is matching people who need a jet with people who own a jet and bringing them together so that the industry facilitates itself through ownership and then through people who want to use those jets. All right, hopefully you got the picture of what the jet charter industry is. And what you're going to experience here is I don't just talk to people about buying their company in this presentation. I talk to them about making them part of something much bigger. I talk to them, as you'll see, about how we can help them create generational wealth. Now, this is what we're doing here. We're bringing people's focus to a whole new level, no longer to think of themselves as a little player struggling to make a profit, but how they can, in effect, as you'll see, become part of a strategic aggregation where they can become the dominant factor in an industry. How do they take themselves in their business to a whole new level? Okay. So that's the mindset. That's the framing. That's the positioning that we use that makes us very different now from anybody else they're going to talk to who might even think about rolling them up into a bigger company. So that's how we begin. And then we take them into not only how we're going to make them the center of the jet charter business, but how we're going to bring them together with new partners. And these new partners are going to be, one is Billionaire Lifestyles. And Billionaire Lifestyles is a company that brings together, aggregates all of the things that wealthy people spend their money on. And it's not just jet charter, as you'll see as we go through this, but it's any and everything that wealthy people spend money on, invest money in, that uses their wealth to make them happier. Okay. So what's the thing that all of these companies that we're going to bring together have in common from all different fields? It has in common that they serve wealthy people. And then we're going to introduce them to ScaleForce, which is a technology platform that enables all these companies that we bring together here to work together seamlessly to cross-market their customers in such a way that they all make more money on their customers by sharing them with others and earning income from that sharing process. And then how that sharing process brings them many new customers from all their partners when their partners' clients are cross-marketed to them. So these two partners, this is the platform, the system that automates and makes the whole thing possible. This is the company that pulls together all of the aggregated businesses that serve wealthy people. And National Diversified here is the company that will stand behind the funding, the financing, the structuring, the strategizing, taking this whole thing public to give everybody a massive win when it's all together. So these are the basic players. And then, of course, there's their company. And now we're going to show them how it is that we actually do that. We're taking the thinking of a person who was already entrepreneurial, already owns their own business, is already successful, is already making lots of money and profit and engaged in things that they are very proud of and have built. And we're taking their thinking a level up. We're taking their thinking from just being a business owner to being a major factor in the growth of their industry and the wealth that they can create for themselves. And so what is strategic aggregation? It's businesses serving a common clientele organized around a common marketing theme. What's the commonality here? Every business we're going to introduce them to and discuss with them today, their clientele are very wealthy people, okay, and major corporations. And the common marketing theme that we're going to organize them around is how this group of strategically aggregated companies that all serve these wealthy people are going to be able together to market in common to the folks that they all represent. So a common marketing theme is going to tie all these companies together and allow them to cross-market their clientele. So that's number one. Number two is the cross-marketing enables the clients of each of our aggregated partners to become the clients of all of our aggregated partners. So as the cross-marketing occurs, if we have, just think about this, you had 10 aggregated companies and each one had 100 clients. Then with probably a little bit of crossover, you got 10 times 100, you got roughly 1,000 different clients, right? If they start cross-marketing their clients, each one that had 100 clients is now systematically being brought, the 900 clients of their partners are being cross-marketed to them. So after a while, you can see where their business is going to compound if this is done effectively. And then the revenue sharing between our solution partners multiplies income while cost reductions drive increasing profit. Okay, so now we got this group together. And what's going to happen is that when your clients are cross-marketed with all 9 of the other folks, they're going to share their revenue with you. So now for each of your clients, you don't just have your own revenue source. You have your solution partners here as part of your aggregated group that are now bringing you more clients, and you'll share some of your revenue with them. Okay, so it's a sharing both ways. And by doing that, you're multiplying the number of clients you have dramatically. You're multiplying the income that you earn on each of your clients dramatically because you've got 9 other services that you're earning money on for those clients. So instead of one revenue source that you profit from, when you're strategically aggregated, you have 9 new revenue sources that you make money on that you never had the ability to make money on before. And you'll see how this all comes together. Then we go through the business model itself of strategic aggregation. And we start with its core. The core of what we're going to be doing is what's called a family office. Now, why is this the core? This is the core because all of the people of wealth today in America already have, or they're going into a family office structure to handle their affairs. Think about it, okay? Life is complex. When you have a lot of money and you own a lot of stuff and you have a lot of responsibility, life is even tougher. But the way you make it not tough is you have professionals who you delegate the responsibilities of handling certain things for you. Now, you can do it one of 2 ways. If you're incredibly wealthy, you have a single family office. Your family office only does this for you. If you're just a cut under that, which is extraordinary wealthy, just not a 20 billionaire plus, okay, then you have a multi-family office that not only handles it for you, but they have a dozen other clients or 20 other clients, some number that makes it efficient for them to operate. And they're able to do this for not just you, but others as well. Now, what do they do for you? They handle your financial planning. They handle your estate planning. They handle your lifestyle and asset management, all the things that you own. And then there's this thing called family governance. Okay. You've got children, you got parents, you've got nephews and nieces, all of whom have some interest in you and you have some interest in them. So if the kids want to use the yacht, there's got to be a way to deal with that, right? There's handling your philanthropy. There's handling the risk management of the things that you undertake. There is administrative services and reporting. So you know what's going on and all the records are kept properly and everything is coordinated. There's tax planning. There's investment management. All these things are handled by the family office. And what we did is we've added through Billionaire Lifestyles one new function to the family office, Billionaire Lifestyles. And that's this party here, which we recruit and train. They're called a certified concierge professional. Okay. So we've taken this role, and the role is to create a center of contact for each wealthy person that's part of this family office, where the wealthy person has one call to make, this person, or one text to send, or one app click to make to connect with their concierge who orchestrates all of these various things for their benefit. So when they need to handle anything down here in the assets that they own, the concierge is trained on how to set it all up. And all of that's done here. Now, as you'll see in ScaleForce provides the automation and the technology that lets this person look at a screen, know everything that this party needs, knows what assets they have, everything they need to orchestrate, and enables them to set anything and everything up for that wealthy person, whether it's to get their laundry handled and get it to the cleaners or do whatever errands have to be run, to what's going to happen and how they get from point A to point B. Everything is orchestrated through the concierge. That's their job. Make life easy and pleasant for the wealthy person. So when this concierge is doing their job, what are they doing? They are orchestrating all of our solution providers that we've aggregated into use by the wealthy people that each of those companies represent. So through that, the cross marketing and revenue sharing is all going to occur. And these are the companies that we'll be bringing together into this strategic aggregation. Now, why am I showing you all this? Okay, obviously we're doing this in the jet charter business and the things that wealthy people need, but I'm giving you the concept here because you can take wealthy people and jet charter out of this presentation and you can put in here a strategic aggregation that serves a certain purpose. And I'll just give you one just so you know that there's many ways to do this. Suppose, for example, that instead of doing this through a family office, we had here a residential real estate broker. Okay. And what we would do is we would aggregate around them instead of things that serve wealthy people, anything that a person would use as a service if they're listing a house for sale or if they're buying a house. So just keep that in the back of your mind. Okay. That you can use this for anything. The structure you're going to see is for the jet charter business, but we can go into any field and do something similar. All right. So cross marketing and revenue sharing. Okay. All the services and products purchased by the very wealthy, including how they make and preserve their wealth. So what's going to go around our strategic aggregation? We're talking to a jet charter company, so we're certainly going to start with that. Okay. So jet charter and jet sales, that's them. But then also helicopter sales and helicopter charter, also yacht sales and yacht charter, also the big boy toys, all those things and gizmos, submarines, and all the exotic toys for wealthy people. They're all going to be here. Okay. And then there's limousine services. There's restaurants, nightclubs, resorts, exclusive clubs, any of the things that are these type of entertainment and hospitality type venues. There's also luxury and exotic car sales. There's high-end jewelers and even hairstylists. Hairstylists today, they can get $500 to $1,000 to see you for an hour, right? And those hairstylists have some of the wealthiest celebrities and wealthy people as their clients, because that's where people spend their money. High-end realtors, insurance, all lines, private security. The wealthy people, their safety is primary thing that they're concerned about, from cyber to their homes to their persons, all places where they spend money. Private banking, different types of connoisseurships, from wine brokers to art dealers. People of wealth spend a lot of money on those things. So all of these businesses have in common that they do some service for wealthy people, from helping them build their wealth from the investments to building their power and their prestige, their recognition, their security, their appearances, their ability to influence, their enjoyment. That this strategic aggregation becomes the key to happiness and a long, healthy life of convenience and privilege, all just a click or a call away. The convenience of putting it all into that one person, the certified concierge professional, who aligns everything for that wealthy person to make their life easy, convenient, healthy, and to facilitate all the things that drive wealthy people that they want more of. We're going to be doing this not just on a flat plane like this, but think of this as multidimensional. Think of this as 3D. So every one of these industries has suppliers as well as customers. So their suppliers get aggregated into the process. What we work to do is a vertical and horizontal integration of all of these companies. Now, already, I'm sure this is starting to sound complicated to you. And 10 years ago, we could not have done this. Why? Because the technology didn't exist. But today, we can do it in a way where once it's programmed, the technology does all the heavy lifting. And one person can literally sit in front of their screen, facilitated by artificial intelligence, to pull together everything and anything in a nanosecond that wealthy person wants to do, organize it, structure it, and facilitate it virtually immediately. In effect, we're in the technology business here as well. But through ScaleForce, we will be vertically and horizontally integrating this and automating everything. And then once we start bringing people into this and we start bringing up their sales and we start bringing up their revenue and we start making acquisitions here around our people. Example, we have a yacht broker. They're big. That's why they joined us. Okay. But one of the ways to make them bigger is not only by increasing their sales, but by buying up some of their competitors and adding them to them. So we'll be building buying power for every one of our affiliated companies here so that their margins increase and their ability to profit increases. And of course, bringing them in that process to economies of scale so that they are more profitable as they become bigger. In other words, not just in dollars more profitable, but in margin, in actual percentage that they make in profit on their sales. Then we show these ownership people of the jet charter company the technological platform that we're putting all this on. So that's ScaleForce. And what ScaleForce does is through their PC connected through the internet to our central system, which orchestrates all of this, we automate the cross-marketing and revenue sharing process. Okay, that's all automated for them. We help them as a company when they come onto ScaleForce to standardize all of their processes and all of their tools so that what they're able to do is themselves become scalable. Because if we're going to grow and if we're going to bring them more sales, every one of our solution partners has to have a scalable company so that if we grow them, then they got to be able to deliver into that growth. And so we work with them to get them onto ScaleForce, which then automates their own company's operations to where it can now follow through with the growth that we'll be bringing to them. And then the system synchronizes the operations of all these companies. So if we have a jet charter company, we have a limousine company, we have hotels, we have islands that people are going to want to fly to, whatever it is they're going to want to go to, if we have them all as part of our aggregated group, then they'll all be able to go on ScaleForce on their PC. They'll be able to see the other service providers so that when the certified concierge professional is orchestrating this trip, he'll be able to integrate seamlessly the operations of the limousine company, the jet charter company, the limousine company on the other side, the hotel that they're going to, or the venue that they're going to. All those things get seamlessly integrated. If I'm the limousine company, I can see what's going on with the jet charter company. I can see that it's going to arrive on time or not. I can see everything that's going to happen because everyone's connected into the common platform. And so what that enables me to do is to run the entire operation of all these different aggregated partners as if they were literally in one company, fully enabled by technology to have a seamless service of the entire process for that wealthy person. See, that doesn't exist anywhere right now. So what you can see is that the system itself is already designed to enhance and better facilitate the needs of wealthy people. So we can do things for them with the system that can't be done elsewhere. Personal effectiveness and accountability is also a product of ScaleForce because we will have what are called KPIs built into the system for all of our solution providers. So if I'm the jet charter company, all of my personnel are going to be tracked by the system. I'll know, do my pilots arrive on time? Do they fly efficiently to the next location? Is my accountant keeping everything in real time and handling all the interactions that has to be accounted for? In other words, every party has KPIs. The system monitors the key performance indicators, KPIs, so that my jet charter company will know if the effectiveness and accountability of all its people, and they can call up and find out who's not doing their job and who's doing it really well. And with the KPIs, they'll be in a position to know who did well, to reward the folks who do well, and to better manage the folks who aren't doing well and maybe replace them. Now, we've already sent to the jet charter company, their management, a demo of ScaleForce. They've already had the chance to experience it. When we show them this, it's just a reminder of the icons that they saw in the system, and they've already been told and shown what each of these icons represent, what they click, what it does for them, how it does everything that they need to do, how it pulls together their whole company, how it identifies the person responsible, how it provides instructions to that person for everything they have to do, how it provides video tutorials to train these people. So if they have to replace one, they can be retrained quickly. How at the touch of a button, they have all the forms and tools that they need already digitized for them to do their job and do it all through the system. How when they need to develop new templates, how that's done, what tools anyway, it's all done. I don't want to go into all this because if you're interested, we'll send you to ScaleForce where you can see the demo. For a wealthy person, life is about experiences. It's not about stuff. They already know they can buy all the stuff they want. The question for them is how do they live life day to day, fully enjoying an exotic or very large range of experiences that ordinary people can't have and that are going to be very pleasant for them. And that's what Billionaire Lifestyles is designed to do, is to make sure that those experiences are the ultimate. It's all facilitated through the certified concierge professional. All the services are fully integrated so that they're easy, smooth, seamless, and that everything we do is smartphone compliant. All they need to do is make a phone call. All they need to do is push the right button on the app, or all they need to do is send a text. Now, for the people who own these companies and are looking to grow their companies, here's some of the things that they've thought about, but they've never, in most cases, had the ability to fully execute themselves. And so we're going to show them the strategy and structure by which we're going to take their people and show them how to leverage their people through corporate culture and values that we're going to help them integrate into their company. And it starts with what values are supported. All right. And here's what we support through the system. The system is designed to help them integrate these values into their company and make them real to their people. And so it's about transparency, boldness, passion, integrity, trust, collaboration, innovation, respect, team spirit, loyalty, humility, tolerance, empathy, compassion, reverence, and fun. Now think about these values in a company. Think about a team of people working together who share these values and have learned how to let these values propel them to a whole deeper appreciation of life and to a whole deeper ability to be productive. It's awesome because when people are coming from these values, they become awesome. These are just promoted. This is what we help them to establish, but we go beyond that because if you really want to know a company's values, it's not what they talk about, it's what they reward. If you see what a company rewards, you know their real values. So while we help to support this, here's the real values that come into it. And the real values start with preeminence. In other words, we want to reward preeminence in a person's thinking and actions. Preeminence means you just do it better than anybody else. You do it at the very top level of whatever it is. And when we put KPIs into the system, we can put them in a way that measures the preeminence displayed by each of the people that they would want to reward in their company, giving their employees and their executives in particular a thought that they get rewarded when they are preeminent in what they do. And there's a system that lets them know how that's done. When they achieve the goals that have been assigned to them, the KPIs will tell us, and we can reward that with money. And we're going to show them as we go for an IPO, we can reward them with equity, with stock options to really create motivation. You got customer satisfaction. Okay, we can measure customer satisfaction for the people who are selling, for the people who are servicing. And when we measure that customer satisfaction, we can reward those people who have accomplished our customers' satisfaction. We can identify leadership. We can identify it and reward it. We can identify accountability because we can hold them accountable. And when they are accountable and stand up for what they do, fix what went wrong, we're going to reward that. And here's one of the most important ones that we want to reward is value added to others. In other words, we want every employee and executive of this company to see what their primary role is in that company, which is to add value to the customer, add value to suppliers, add value to investors, add value to other employees and their ability to accomplish things. And so we can monitor this, we can measure this, and we can reward for it. Now, what rewarding for these does is it puts a rocket engine on people who now see the way to win is to fully involve themselves in the benefit of the corporation, the benefit of its constituencies, and as they help produce those benefits, they are rewarded. So we got all the motivators now in alignment and working in the right way. And then the last item here is mission prerequisites. In other words, when we take on a mission as an aggregated group, okay, we want to identify those missions that are boldness, go big or go home. What you're looking at right here is go big or go home. We're not here to fiddle around. We're not here to make some money at the edges. We're not here to be a minor factor or even just a good player in an industry. The whole mission here is go big or go home. Everybody knows Elon Musk. Everybody knows that he just bought Twitter. He looks at the problems that he's seeing. He sees a problem in lack of free speech, and he goes big, billions of dollars big to solve the problem. And he takes it upon himself to be accountable to solve the problem. He's not waiting for somebody else to do it. He just goes and does it, adding value to everything and everyone. If the project doesn't add value to everything and everyone, we're not going to do it because the project doesn't have the validity that we're looking for. We're looking for things that matter. We're looking for things that add to everyone, where no one is a loser, where everyone coming together wins together and wins big. We're looking for entrepreneur development. In other words, when we bring in a company into a strategic aggregation, we're going to develop the entrepreneurial skills and capacities of those owners. We're going to educate them, train them, bring them together with other entrepreneurs where they can brainstorm and build together in an entrepreneurial way where they're their own boss. They do it the way that they want. That's why we're bringing them in the first place. We're not bringing them in to tote the company line. We're bringing them in because of their creativity, because of their ability to grow in their mind and then produce that mind growth into the company that they've developed. Now, when we talk about that, put your head in the space of the owner of this very successful jet charter company, where we're not talking about buying him and shoving him to the side and telling him what to do once we own the company. We're telling him that our ownership of his company is going to be done in a way where it's going to empower them. It's going to enhance their abilities. It's going to give them more of everything that they want, that they went into business for in the first place. And then the last item here is icon development. We are very hopeful that some of our aggregated people want to grow and dominate their industry, who want to be the biggest and the best, and they want the support and the capital and the business strategy and the business structure that can make them not just another player in the industry, where they become the industry icon. they become the one that everybody in the industry knows and knows that they were the ones who really displayed the ultimate in leadership, the ultimate in growth ability, and who are the most knowledgeable and the most capable and the most competent in their field. So all of those things are things that are part of our mission prerequisites. So this entire undertaking is built around these mission prerequisites right here. By now, I want to promise you, everybody we've talked to is not just excited, they're falling off their chairs because they've never heard anything like this before. They've never encountered a strategy and a structure that truly empowered everyone it touches and supplied the technology and the wherewithal and the know-how to actually put it into an executable plan that they can be part of. It's awesome. It's awesome. And then what we want to do is we want to talk to them about how we monetize this for them, because right now, all we've talked about is the concept, right? Here's how it comes together. Here's what it does. Here's how it does it. But we haven't really dug into the monetary side of it yet. How do we monetize this for them so that they're going to develop generational wealth, not just riches, not just a great income, not just 10, 50, $100 million in their bank account. We want to talk to them about how for the next as many generations as they can see, their family will be elevated to the level that they believe is important for them and their family. All right. So we're going to talk to them about financial leverage. And of course, we've mentioned the IPO, but that's only where it ends up. We have a whole bunch of leverages we're going to apply to what they do that is going to create this incredible wealth. Now, remember, everybody we talk to is an expert in their business. Okay. So in this case, everyone we talk to is an expert in jet charter, right? I don't know as much about jet charter as they do, but what we're experts in is financial leverage. So we're going to take and marry our ability and our understanding and our insights into financial leverage. And we're going to bring to them something they do not have now, which is the ability to monetize what they are the expert in at the highest possible level. So we're going to introduce them to this thing called financial leverage. All right. And we're going to start out by loan to value leverage. What is loan to value leverage? Loan to value leverage is if you go to buy a house, you don't pay 100 cents on the dollar for the house. Okay. You put down 10 or 20% or whatever their number is, and 80% you buy the house through leverage. So you're taking your ability to earn money in the future. You're using that to acquire a house today with very limited amount of money. And then you're allowing your income as it grows over the next 10, 20, 30 years to pay off the house. And in a business, you would do it with a plant or a physical facility. You would do it with equipment. You would do it with various things where you buy, you put a very small amount down, and you have the full value of that machinery, equipment, inventory, whatever it is, whatever the loan to value relationship is, that's leverage, where very few dollars can accomplish some very large things. Now, everybody knows that exists, but they've never orchestrated it in a way where it works for them at the ultimate level. And we're going to do that for these people. We're going to be able to bring to them this value at its highest possible level in how it operates in their business. Then there's the debt to equity leverage. Okay. It's a little different than loan to value. Okay. Debt to equity just simply means that if I have a certain amount of equity in a deal, I can borrow the rest. Why? Because the folks who are loaning me money will look at the equity I have. They'll see that's my skin in the game that I'm going to protect. So they'll take some risk with me because I've got my skin in the game, and they'll loan me maybe 3.5 to 4 times my equity. Now that's got nothing to do with the loan to value leverage, because I can take my business, fully exploit the loan to value leverage of all the assets in it, then borrow more money on the debt to equity leverage of the equity that I put into my company. And now I can borrow more money to then more leverage on my loan to value stuff. So I've got leverage on leverage if I know how to structure it. Then we're going to show them structural leverage. Okay. Now structural leverage works like this. Maybe many of you remember the story of the Rockefeller corporations where he owned a company. Then he borrowed money, and then he brought in investors, and he let them own up to 49% of the company. But he retained control by having 51% of the company. Now, when he needed more money, he couldn't go out and raise more equity money because he'd already sold 49% of the company. So he would form another corporation that was owned by the company he owned 51% of. And in that operating company, he would sell off 49% to investors. Okay, now he raised more money, but his 51% of the parent company controlled 51% of the sub company. So he controlled both companies. And then if that needed more money, he would take that sub company, do the same thing over and over again until he had a string of companies where his one parent company owned control of billions of dollars worth of companies, and he controlled them all. And that's called structural leverage. Okay. And then you have lease leverage, which means that you don't own it at all. Okay. You just pay a certain amount of rent for it or lease for it, and you have the value of this very substantial assets that you can put to work. And if you know how to put it to work profitably, then that lease leverage creates even more money for you in return. And then there's tax leverage. Okay. What is tax leverage? You have investors that really don't care if they make money or not when they invest money in certain things. And they'll invest the money in those things, not because they're going to make money on it, although that's still the goal. And they're probably going to make some, but they did it because for an investment of actual dollars, when we showed them how to leverage their investment properly of, let's say, $1,000 of their money, they create a $5,000 write-off against their taxes. And their tax rate is such that they made more money in the tax write-off than they invested in order to get the tax write-off. So now you can get people to invest money into things by knowing how to structure it for them tax-wise so that they'll put up money, not because you're going to pay them in profit, but because you're going to give them money from the government that doesn't cost you a dime. Okay. So you satisfy your investor with government money and you got the benefit of the money that they invested with you in order to do that. Okay. So that's another area that we bring. National Diversified is going to orchestrate all this for them. And then in the IPO, you have the price earnings multiple. Okay. So you're taking all the money you're creating through all this leverage here, where you're taking a very few dollars of assets and you're multiplying the control of assets to where what you're able to produce on your investment, on just your very small investment through then all these leverages, you've got so much assets working for you that your earnings from these assets are substantial. And then when you go public, you take those earnings and you multiply them again by 10 times, 15 times, 20 times, whatever your PE ratio is when you take the company public. So your leverage on leverage on leverage on leverage, and then the ultimate leverage. And then you monetize this through that public offering and you are able to have liquid stock that you can take to your stockbroker and sell at this extraordinary multiplied price from what you did with relatively little investment, actual real dollars. And then you take that further because if you've built a high price on the stock from what you've done here, if you are familiar with the marketplace, what happens when you've done this is if your stock is really successful and of high value, then what's happened is the only people that can afford to own it are institutions like hedge funds, insurance companies, pension funds, big institutional investors. So if you want to take and make that price much higher, you will split that stock down to where there's so many shares out that the actual value per share is something that an ordinary person can buy. And because you've been so successful, the public wants to own your stock, the real public. And what happens when you split the stock, even though the price per share goes down, if you take the number of shares that you have, your company's worth a lot more once you do the stock split. So you're leveraging again, And then the next part is stock retirement. So now you've built all this, you have all this wealth built into your stock. So now what you do is you have the company with its surplus cash repurchase your stock back from the marketplace, reducing the number of shares outstanding, increasing your earnings per share because there's less shares outstanding. So in the retirement process, you create a higher value to every share that is owned by somebody. And since it's the people we did this with that own the majority of the company, when we retire stock using our profits to do that, everybody makes more money. So it's leverage on splitting more leverage, on retirements, more leverage. And then the ultimate for our people. This is the process that creates multi-generational wealth. No one of the people we're talking to have a clue how to do this for themselves, nor would they be capable of doing it for just their company. But when we put together a project like this, we do know how to do it. We can execute it. And when we do it, it's going to produce multi-generational wealth for everybody that's part of it. Now, what do we mean by public spinoffs? One of two things is going to happen with every one of our strategically aggregated partners. We're either going to continue to love each other and work together, or there's going to be somebody there in one of our groups that is saying, this has been great. I just really want to run off and do my own thing. And I want to do it myself. I want to do something myself. Our plan, our process, we have no enemies. Okay. We have no enemies because we know how to make money on everything. All right. So what's going to happen is we got that entrepreneur. So we'll say to him, look, I got a great idea for you. Okay. And we tell him this up front. You've built your business to a very big level. Oh, we can get somebody else to fill your role. We got a waiting list of people over here who want to get into the strategic aggregation. But here's what we'll do for you. We'll spin off your company. We will take part of our owning of our shares of your company, the companies, because we own that company, right? We bought them. All right. So we're going to take shares that we own and we're going to declare those shares that we own or some portion of them as a dividend to our stockholders. Okay. So we are a public company. And when we spin off shares of this company that we own to our shareholders, then what's going to happen is your company is going to be owned by the public. And a very simple registration form now makes you a public company. We'll work with our investment banking group with another underwriting on your company to put cash into your company. And you're going to be spun off. You'll be doing your own thing in your own business. You're the boss. You do with it what you want. And we will periodically be selling off our shares of your company into the marketplace because we'll make money on your spinoff. And you will make money by being now the significant owner of your company, taking it in the direction you want, going off and doing your own thing. And we'll fill your slot with somebody else. No problem. Okay. So everybody gets to win. So we don't have arguments with anybody. Somebody isn't happy, we spin them off. They make money, we make money. Okay. So everybody, win, lose, draw, is going to have a way to go out of this system that makes them wealthier and makes them happier. Now, our goal in putting this group together is going to be in excess of this, but we don't tell people that because we'd scare them. But the idea is to triple our earnings per share every year for at least the next 5 years and to achieve a 30 times PE ratio for the IPO. So that every dollar that we've manufactured in earnings through their excellence, through the strategic aggregation and the cross marketing, through all of the financial leverages all the way through here, then to take all those earnings and do an underwriting at 30 times PE, exploding the amount of wealth that each person owns in our collective strategic aggregation. And we have a formula by which we acquire the majority interest in all of our companies. We leave the owners, we're owners now owning a good proportion of the company. So they've gotten cash out when they bought the majority share in their company, they get cash out, and then they're still owning enough of the company that this whole process creates significant wealth for them through that public offering where they own stock now in that public offering. So this is the general process that we've put together. And National Diversified Funding is driving the financial side of the process to deliver the ultimate payoff for everybody. As far as that jet charter company is concerned, what we want from them is for them to function, and we'll support them in the process. We'll train them. We'll work with them. We'll take on the responsibility of integrating them into the strategic aggregation and onto the technology where they become the growth platform for jet charter. So we'll be helping them acquire other jet charter companies. We'll be helping them to integrate their service into the full process, where the strategic aggregation process will be the driving force behind their growth. So they're going to have organic growth, which they would do anyway. So that's going to help grow. They're going to grow by strategic aggregation and cross marketing. So that's going to accelerate their growth even more. They're going to grow by acquisition, which is going to accelerate their growth even more. And they're going to grow through capital injection so that as they're growing, we'll provide the sourcing of capital that helps them to grow by expansion of their global footprint. All of these propelling their growth. And that's part of what we bring to them in this process. Acquisition or equity investment partners is part of what we're going to be for them. And the only next step that they have to think of to make all of this happen is to sign our NDA. And let's, for the next week or two, explore the possibilities how you become our jet charter growth platform. And then I simply say, does this sound like something you'd like to pursue? I don't get a no. I don't get a no. I always get yes. Now, I'm not saying we're going to actually end up acquiring all these companies because we may see there's flaws in their own financial structure, or they may at the end say, this bizarre guy, he's just too wacko for me. I can't handle all that stuff. So there's no guarantee it's going to happen, but I do not get a no. What I get is a level of excitement in these people that it's been since they've been children, since they expressed that level of excitement in anything. I just showed them their trip to Disneyland and they are very excited about it. And so that's what strategic aggregation is as part of our process. That's the whole process right there.